Welcome to another edition of Brian's Big Idea, and this week I'm going to talk about the meme stocks. You know, they're wild, they're crazy, they're going all over the place. But the foundation of what makes a meme stock and why are these stocks so volatile, and what's kind of the best way to play them or think about playing them. It's not fully recommended you go after all of these. I mean, they are interesting. The stocks are moving around a lot, especially GameStop moving around. You got Roaring Kitty with a big position, and there's a lot of pressure out there on the name. But it's all very interesting until suddenly it isn't, and you might want to protect your portfolio. So let's go ahead and just take a look at some of these stocks and the meme stocks, and then we're going to talk about why these stocks are the way they are. Why did they get all this interest? All right, so let's go right to our screen. We see GameStop is our stock right here. It's GME. Roaring Kitty's big position. It's a Zacks rank number 4. That's a sell. That means earnings estimates have been moving lower of late. But we label it A for growth and a C for value. And we can see those recent spikes up and down. You know, stock traded $67 the other night, back down to the $25 range right now. As I think about stocks, I think about them a little bit differently than some people. That think more about the numbers, because I'm looking at a big universe of stocks. You know, obviously there is a bigger idea of a business and what's going on with the business. Do you want to own that business? That's why you buy the stocks, but the numbers tell you the story. And I'm going to flip over to this chart. This is our fundamentals chart here that you can go to the Zacks website. So right here, you can click on that link. And I have taken a look at the first line is going to be revenue, and the second line is price action. So the blue line is the price of the stock. And then we look at the quarterly revenue. Where has it been? What's going on? The company recently reported revenue, and we can see that this is the quarterly reports. Where are they going? This is a seasonally weak quarter, but from this we can see so is the next quarter usually. So we got these 2 points where you come down from this big seasonality, and then you shoot back up. You start moving back up. We are at that first point of low seasonality. Would it be, realistic or unrealistic to expect another revenue number around 800 million? That would not necessarily be great for the company, but it wouldn't be the worst thing either, because we are expecting something big to happen. Obviously, big short squeeze going on in the GameStop. Another stock that is big in the meme world is AMC. And that's the movie theater. AMC is the ticker. It's a Zacks rank number 2 right now. F for growth, C for value. Let's take a look at the numbers on AMC. And we jump over here and we see, I'm going to do this like I do my aggressive growth videos. We're beating the number somewhat consistently. We just missed. We are break even to losing money to losing more money and losing even more money. But on the other hand, I see estimates going from a loss of $1.18 up to a loss of 62 cents. And next year going from a loss of 90 cents to a loss of 50 cents. That's good news for AMC. Plus, they recently did a couple offerings, so they got a lot more cash in the bank, so they got a much longer runway. Top line is looking a little weak, 5% contraction this year. Maybe some better movies are going to come to the theater, 11% next year. I guess I saw Top Gun and I saw The Sound of Freedom, but other than that, it's been years since I've been to a theater. All right, let's go to our next one, and it is SunPower. And this is going to be not necessarily your meme stock, but it's going to talk about the idea of why the meme stocks are meme stocks. Okay, SPWR is the ticker. It's a solar stock. It's a 3, so estimates aren't moving. It's got a B for growth and a C for value. We can see a little spike here, coincidentally the same time that GameStop spiked. Why is that? They're not related. It's not even a meme stock. Well, why did GameStop spike in the first place? Well, let's take a look at our numbers. Got ahead of myself. This was a miss, because our estimate was break even. They lost 7 cents. Our estimate is 3 cents. They lost 13. So they've been missing the number badly. So when you see that, that's not a good sign. How about estimates? Holding still for the most part, 61 cents here, 26 to 25. That's actually an improvement. Going to give you the little arrow up for that one. And let's see, sales contraction this year, 15% contraction this year, but growth next year to 11%. So why are these stocks meme stocks, and what's the big driver? Well, the big driver is short interest. And I looked at this stock in particular, and it's SunPower, and this is from shortsqueeze.com. And the short percentage of the float is the big thing. And this is a very large number. 88% of the short, 88% of the float is sold short for SunPower. That means a lot of shorts are, all the traders, investors are all on one side of the boat. And when that happens, you could be in for some rocky seas, could be in for some trouble. It's a crowded trade is what we'd call that. In comparison, I'm going to say we'll put up GameStop, and Short Squeeze tells us that the percentage of the float, they don't have one. But I've seen it before. It's 25% roughly. Of course, it was much higher before. It's 19%, which is a pretty big short interest for AMC. But the idea is, since these stocks can be incredibly volatile and you may not like the underlying business, but you want to participate in these things, best way to do that is through options. And options are a very difficult concept to just jump right into. But what we do have as a service here at Zacks is the options trader, and it's run by Kevin Matris. He gives you a daily commentary. It tells you all about what's going on in the world and then he'll have some options plays for you. Now I'm not going to show you his portfolio because I can't even speak to it, but it's a quick little look at those lines. And there's going to be, you use both puts and calls to limit your risk. Now that is possibly the best way to play these meme stocks or these big short squeezes, because we don't know when the next squeeze is going to come, and it can be dangerous to your portfolio to be in one of these things and suddenly there's a big, huge additional short or possibly an offering like what GameStop had or whatever the case may be. So you playing these stocks via options is possibly a very good way, probably the best way, but there's lots of risk. So I encourage you to think about signing up for Options Trader to get a little better understanding of how Kevin places his trades, looks through the options. He understands all that stuff. I'm going to tell you right now, 95% of the time when I've placed an options trade, it's gone to zero. I'm not the guy for options. And if Zacks didn't know that, I'm telling you that now. That's why Kevin does Options Trader. That's why he's the guy that does that. That's why I'm not the guy that does that. And I don't want to give you information on that. But I think it's the way to think about playing these things because it limits your risk. The problem, obviously, with the options is that you have to be right in three ways, right? You not only have to be right directionally, you have to be right in timing, and you have to be right in your strike price. So three different things, three facets, and I'm seldom right in any one of those. So when I have to layer and be right on all three, it becomes that much more difficult. All right, that's my big idea for this week. Be sure to join me next week when I have another big idea. Until then, why don't you go to Zacks.com/promo to check out all of our latest programs.